Hey guys, what's going on? Kunal here, Bulls on Wall Street. Guys, hopefully you guys are having a good year. It has been a wild year for the stock market, as you know, there's been so many of the stocks that were hot in 2020 getting smoked out in 2021, and even then the market has been really kind of hanging out near highs this whole time. And it's for probably a lot of new traders, especially those of you guys that came in the market last year. You're probably wondering, like, what the heck is going on? Like, how does this happen? How can the market be up so much, but then all the stocks from the year before that I was playing are going down? And then the main question I've been getting asked is like, well, what is working in this market? You know, what has been working in this market, in this environment of the last couple months? I'm sure you guys have seen, right? Like all the former friends that were like so fun to play, like, you know, all your EV companies, you know, like CCIV and XPAD, and right, all the SPACs, right? Everybody was so hot on SPACs. Every single one of them is down 60, 70, even 80%. I mean, there's some of these, like we used to trade like XL. It's at 35 bucks. I mean, this thing looks like it's on its way to zero, right? You know, work hard, you know, so a lot of people crushed it, especially the retail trader in 2020. The market has been near highs in 2021, yet almost all these kind of stocks have been going down. So like, what has been working in this kind of market? And so it's important to just really figure out, number one, where the strength is in the market, but then also what type of setups have been working. So one of the things that I like to do, you know, on a weekly basis is I run an industry scan in TC2000, and what it does is it compiles a list of indexes that will show you the strength. So I usually will do like a 30-day sort to see like really what the heat is. So you can see here, there's all sorts of sectors here, 22%, 17%, right, 15%, and even their 90-day runs have been pretty important. And so when you really think about like what's been working, you know, you want to be not just thinking like what was working last year, like what do people talk about? You know, last year and right in December, it's like people are talking about like GME and AMC and EV companies and battery companies and all these companies. And then this year it's been different. And it's important to know that every year the market rotates, and that's always the case. But because we had so many new people in the market from the coronavirus, it's hard for people to adjust to current market conditions. So the easiest thing to do is run a sector scan in TC2000 and start going through the individual components. You can see here, like aluminum's up 60% in the last 90 days, and then your 30-day run is 22%. So on TC2000, like if you hit this three-prong button, you'll see all the different aluminum stocks. So then you can start to filter through and see like really what's been working. So you can see here, like copper's in a big breakout right now, right? So you can come in and you hit this three-prong button, you'll get the major kind of copper stocks. So like something like this FCX, this is something we've been in our swing trading group, and it's big trender. Like, you know, this thing was at $4. If you didn't know that this was a copper iron ore company, and you were just looking at the chart blindly, you would be like, wow, that's a battery company, or that's a EV company, it's something really sexy, but it's not. It's iron ore, it's copper, it's an inflation play, and that's what's been working in this market for so long. So you can see here, like this is steel, right? So steel's up like 400% in the last, you know, so many months at the coronavirus lows. So you hit this and you'll start to see like all sorts of like really interesting trenders over here. And so that's a really, really important way to just go and see where the strength is, what is actually worth playing. That's what Paul always taught me. It's called a top-down approach, meaning you scan for the strong sectors, and then from there, right, you narrow down the individual stocks to see like really what's working in this market. Now, on the other side of things, we have been crushing it on the day trading side on shorting tech stocks. As you can probably see, right, there's so many of these, right, like the Pelotons and the Zooms and all these hot ones that were going to change the world, right? They've all collapsed. They're down 50, 60%. And frankly, they probably have even more downside to go, because you have to always think about not just how much down a stock is, but really where it started, right? So like you've got a stock that's at 18, 20 bucks. It goes to $200, $300. yeah, if it gets cut in half, it's still probably a little bit of room to go sometimes in certain market conditions. But I want to talk to you about a setup that we've been doing on tech stocks. I mean, I'm talking like every single day. This is called a VWAP fizzle. This is one of my favorite setups on the short side, and it works really good whenever you see any tech stock, any of those growth names, because it's really growth names that have been crushed. Like the stocks that were up so much because they were growing fast, those are the ones that you want to really go after. So like you see like this like name like Peloton, this was a huge coronavirus growth name. So we've been using a setup on this called the VWAP fizzle that has been working like a charm. And what the VWAP fizzle is, you know, anytime you see one of these tech stocks, and especially when it's in the downtrend under its EMAs, when it spikes up in the morning. So like you can see how this stock started at like 87 bucks, ran to $92, right? You know, what'll start to happen is as it's grinding up, it'll suck in fresh buyers so that you think like, okay, wow, maybe this stock is ready to bounce. It looks cheap, right? And cheap always gets cheaper, but we're so conditioned in retail, right, that if something looks cheap, maybe it's it. We all want to catch the bottom of something, catch the next big run. But what'll often happen is like this thing, like see how like this thing spikes up like $5? Well, that's usually just a sucker spike, meaning it sucks in some fresh buyers who think like, wow, maybe this is bounce day. And then the smart money turns over to the dumb money, meaning that right now there's distribution happening in the markets, meaning big players are selling off shares nonstop in any growth company anytime they get any spike in them. So what you want to really start to do is like, as you start to see like something like this spike up, when that 9 EMA starts to roll over and it starts to point down, that's your short-term moving average. Whenever that stock breaks under the VWAP, I take that trade. I'll put a stop at the top of the candle, and you can get into like a really, really nice flush on these. And it's a great day trading setup, and we do this nonstop. Like, you know, same kind of thing in coin today. Coin has been on a tear, went from, you know, 250 to 300 last few days. So like, see how like it was down here at 299, spikes up to 304, and it actually looks like it's going to break out here. And in a traditional market, a strong market, you see that pattern, you're thinking long only. But you always have to think about the psychology of what's happening in the market. So we are taught in trading books, and it is true, when you see that type of consolidation, you are supposed to long. But the caveat is that only works in certain market conditions, meaning you need a steep market uptrend in the underlying index for you to do a long in that type of pattern. The parameters of this market are telling us the strength gets faded off. So all we do is like as this stock starts to, right, looks like it wants to break out, when that 9 EMA starts to roll down, when it breaks under the VWAP, take it, put a stop over the top of the candle, and it'll get you into like a really nice move to the downside. And this is classic distribution. You know, this is classic like distribution type action. You know, same thing today in Tesla. Like, see how it's down at 600? People love Tesla. So anytime it gets cheap, they want to buy it. And it starts to spike up a little bit, and people are like, oh my gosh, like maybe this is the bottom. So it'll spike up, and then as it breaks back under that VWAP, right, and make sure that 9 EMA is curled down pretty close, put a stop at the top of the candle, and it'll get you in. So it's a very simple day trading technique. It's not meant to really hold more than an hour or hour and a half, but you get really good range in these sell-off markets, and it's been working like a charm. We've been doing it every day for months on stocks like Baidu. I mean, I've been doing this almost every single day on Baidu and PDD. I see a spike in them. I'm taking them down every single day. I haven't really I've maybe taken 2 long trades in like the last 2 weeks, even on the days the market's flying around. Really, the money has been on the short side. You guys got to learn all this. We spent a lot of time in our 60-day boot camp talking about shorting. It's something you have to learn. Now, these conditions don't last forever. You know, we probably have some more downside, but it doesn't mean it's going to be like something that lasts for like years and years. So if you're like new and a little bit frustrated, you're like thinking like, wow, like, you know, my, you know, stocks that I used to love to trade, right? Like this F-cell, like none of them are doing anything. It's okay to just sit in cash, chill out for a little bit, practice some shorting, get used to it, spend some time studying. Last year was like a gift. It was a once in a 10-year gift where, you just draw a squiggly line on a chart, you read some asshole's blog, and before you know it, right, you made all this money. And now the market is actually what it always has been like, where you have months where it goes up and months where it goes down, and that's a market. That's how it's always been since I've been trading and owned this business since 2008. Guys, feel free to ask me any questions. I know it's tough times right now for some of you guys, but be mindful. You can make money in this market, more money than you did last year, because the range is incredible, and it's actually faster to make money on the short side than the long side anyways. Guys, feel free to leave me any comments. You can always hit me up, KUNAL@BULLSON.WS. Guys, take care. I hope you're doing well. Let me know if you need anything. Take care.